Exchange-traded funds. It's a $24 billion industry, the fastest growing market in financial services. There's 128 ETFs on the market, and Blackrock's iShares says because of that variety and investment choice, investors and advisors are increasingly using ETFs just to build entire portfolios.
So 4 or 5 years ago, when the ETFs were really starting to gain traction in Australia, we saw a lot of investors using ETFs to get access to international securities. US stocks was the best example. What we then see is investors realise how simple to use and low cost and transparent ETFs are. They start to think, how do I build entire portfolios out of these really easy to use products? And so that's what we've seen over the past 12 months or 2 years, where particularly advisors are starting to think, how can I build an entire portfolio using just ETFs? And we've seen a lot of traction in that area.
To keep up with increasing demand, iShares developed a set of core ETFs to help advisors and investors build entire portfolios.
So we've got Aussie equities, Aussie fixed income, international equities and international fixed income. 5 exposures in total, and just using those 5 exposures, it's possible to build a broadly diversified portfolio across asset classes. The other thing that the iShares Core range is designed to do is really help advisors and end investors bring down the cost in their portfolios. The cost of the iShares Core range goes from 15 to 26 basis points per annum in total management expense ratios, and those are some of the lowest fees available in the entire market. And when you build a portfolio just using the iShares Core range, the total portfolio cost ranges between 16 and 17 basis points in total management expense ratio. Again, one of the lowest cost ways to build a globally diversified portfolio on the ASX.
On top of that, iShares S&P ASX Small Ordinaries ETF has been ranked the 3rd best performer in the sector after it generated 14% year on year and caught over 92% of the market's upside.
The Small Ords sector has been quite a strong performer, largely I think due to a bounce back in some of the sectors that are represented very heavily in that market, like small cap mining stocks, for example. So we know that as the commodities boom slowed down 12 or 18 months ago, that some of those companies were under stress. Many of those companies have recovered somewhat in their pricing over the past 12 months, and that has led to a performance boost for that small cap sector of the market.
For more information about iShares ETFs, you can refer to their website listed below.